Hello everyone, welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. This video is being recorded on the evening of Wednesday, September 25th, 2024. In this video, we're going to talk about gold sentiment. Is it too bullish? Does it mean that gold's getting too popular and we're going to have a nasty correction coming anytime soon? Well, my answer is no, and I'm going to clarify that by going through a few charts and a few sentiment indicators. So let's get to the charts. Okay, so first things first, we're looking at gold here. This is a weekly gold chart, and also the gold COT. And so this is the commitment of traders data. So every week, the commitment of traders report comes out on Friday at about 12 p.m. my time, so that's 3 p.m. Eastern time. And it tells you how all of the futures traders in the market are positioned. It breaks down and they're categorized. So you have some that are small speculators, some that are large speculators, some that are commercial hedgers. And so the hedgers they're usually more conservative. They tend to short when the market goes up, or they sell strength, they buy weakness. Whereas the speculators and traders, they tend to be trend followers. So those are the gamblers. So this data here, this is the open interest in the market. And this is the net speculative position in gold divided by open interest. So I take this position, I divide it by open interest, and we get a percentage here of open interest. And naturally, so this excludes all the commercial hedgers. So we're looking at all the speculators basically. And so the higher this position is, it basically means the more speculation that there is in the market. And so at that point, there can be a little bit more risk depending on some other factors. And so naturally, with a futures market, you're thinking about a commodity market, just a single commodity, when the net speculative position is pretty high, that means there's lots of speculators who are holding long positions. They're expecting the market to rise. And naturally, as the market starts moving up, more speculators come in, the net long position moves higher and higher, and eventually, more or less, at some point they have to sell, and so the market can go down. And so this indicator itself, it's not always perfect. It works pretty well for gold, but it's different for silver. That's all I'll mention at this point. But with respect to gold, there are some important things to point out here with the COT. And so these light blue lines here are points. These are basically when the breakout moves in the market in gold when they started. So these thin lines here, this is the one here you can see. We go back, this one here, this is 2019 when the Fed cut there. So this is late 2009. So you get the point. The light thin line, that is the point when gold really started to make its breakout move. And so we can see, if you look at some of these lines, the net spec position here is, in some cases it's fairly low. This was an outlier here, it was pretty high. Here it's low, here it's low. So you can see that with the thin lines. But in this video, as I'm droning on here, I put in, for this video and for this topic, I put in these red lines here. So the red lines show points when the net speculative position got fairly high here, around 60%. So we can see 62% now. So I went and I looked, and so again, the red lines show when the net speculative position was pretty high. So that means when speculation in gold was pretty high in the futures market. And so we can look at the red lines and see where gold is. So we can go back to the 2000s bull market. So there was a little peak here, a tiny peak, but then gold continued to go up. Another one here in 2009. This was actually right at the time of this big breakout through 1,000. And here's 2019, the first interim peak here. And here's another one. This was, I think, right before the COVID crash. But you can see here with these red points, like these red lines rather, they didn't mark every significant top. Like if you look at here, you look at this top, now's the end of a secular bull, and we can see, the net spec position was actually lower at that point. It peaked here and gold kept running up. Same thing here, you had this signal here and even this signal here, and gold kept moving up before this peak. But at this point, gold was still on a secular bear, in my opinion. So, and we go back and we look at the 2000s. I mean, you have this here. Yeah, this was an interim peak. Gold went down, but then for a couple months, then it went up after that. This was in the middle of that huge 05 to 06 move. So the point that I'm getting at here is the net spec position, it's pretty high right now. It's at 62% of open interest. But if we're looking, that doesn't necessarily mean that gold in this new secular bull, that we're going to see an interim peak or a significant peak. Maybe we get that peak or 2,900 or 3,000, but here and now, looking at where we are and judging from history, that doesn't mean gold's about to have a big correction based on history. So it's more nuanced than that when you're looking at sentiment. And so the reason is, like, when you're just a couple months into, or 5-6 months into a major breakout in gold, when you're starting a new secular bull market, like there's not enough people in the market yet. Like, there's still buyers that are ready to come in. Even in the futures market, there's still traders that are ready to come in and buy every dip. So that's why I'm not concerned yet about this reading in the COT. And this is open interest, by the way. In open interest, there's still a lot of room that it can move higher. Like, if we look at some of the peaks in open interest during the secular bull. I mean, here's this one here. You had the '08 peak. This was pretty significant. Here's another one here. The market peaked, 6 months or so after this peak. But of course, we were still in a secular bear here. You had this big peak here. Gold went up a little bit more than there was a peak. So based on open interest, this would be way more concerning if open interest was up here right now. That's why I'm not concerned about the COT for gold, at least not yet. Here's a simpler thing, and this is just looking at gold optics, which is from sentimenttrader.com. They do great work. It's like a public sentiment poll, and these things usually go from 0 to 100. And so here, this is the data of the sentiment. The blue is the raw data. I don't know what color this is. Maybe it's gold. So that's the 5-day moving average. This is actually weekly data. So in a daily sense, this would be a 20-day moving average. And so I circled some of gold's breakouts here. So this is when gold broke out here in '05, and this is where the interim peak was. This is, I should have marked here. So sentiment was really bullish here when you had this breakout in 2007, but the interim peak wasn't until here. Here you had the breakout in '09, that one above 1,000. Interim peak, not until this point. You go back and we look here, this was the peak after the COVID crash, and this was the breakout in 2019. So this was in here and now. This is the breakout, and here's a very strong move in bullish sentiment. So when the market makes a breakout and sentiment it's already bullish, it's getting more and more bullish. Yes, you don't want it to get extremely bullish or be too bullish for a long time. That would be concerning. But as we can see here, based on this indicator, you get the breakout here, what these circles show, and the peaks don't come until well after that point. So again, maybe we're setting up for a peak of 3,000, where gold could conceivably, maybe it corrects to 2,600 or 2,650 at that point. I'm just putting numbers out there. But it's good to see, because it's been such a long time, it's good to see sentiment getting really bullish, especially when you're early into a breakout. Yeah, it's a little overstretched here and now, but this is not concerning. Now, if we're 12 months from now and we're at 3,800 gold, and it's been a year or 18 months where sentiment has been around here for a long time, that could be, gold could be setting up to make some kind of a major interim peak at that point. So you have to look at sentiment. You have to judge where the market is. Context, that's the word I'm looking for. The context of the market, price action, is it in a secular bull or secular bear? How long has it been moving up for, et cetera, et cetera. You have to look at all these things when you're looking at sentiment. And just the last chart here. And this is another sentiment indicator. So this is looking at the ETF holdings, so all the gold ETF holdings. So this is in blue, and then gold here is in, what color is it? Why can't these graphs use colors that make it easier for people like me to read? But anyway, okay, so I don't need to know the color. There's only two things here. So this is gold, and the blue is the ETF holdings. And we can see there's kind of a divergence here, where ETF holdings are just starting to pick up, and gold is here. So this would be more concerning if the ETF holdings were right here. So there's still a lot of room for the retail investor or the Wall Street broker and all those types of people to buy gold ETFs. So based on this, this is not a sentiment concern yet. So that's it for the video. If you watched this far, thank you. And as always, leave a comment. Let me know what you think. But it's clear to me, short to medium term, there's still upside for gold. Yeah, people are getting bullish on it, but that's what we need to see. That's what we like to see. Now, if we're talking here in a couple months and gold is at 3,000 and sentiment is really, really bullish, that's probably telling us that, the market's too overbought and it needs a big correction at this point. But here and now, I don't see it yet. Thank you for tuning in. I'll talk to you guys again in a couple days for the weekly recap.